Ladies and gentlemen, good day and welcome to the Kilitch Drugs India Limited Q4 FY23 earnings conference call hosted by Kirin Advisors. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference call is being recorded. I now hand the conference over to Mr. Gopal Chandak from Kirin Advisors. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. Thanks for joining the conference call of Kilitch Drugs India Limited. I would like to welcome Mr. Mukund Mehta, Managing Director, Mr. Bhavin Mehta, Full-Time Director, Mr. V.S. Ranjan, Independent Director, Mr. Sunil Jain, Chief Financial Officer, and Ms. Pushpa Nayapani, Company Secretary of Kilitch Drugs India Limited. Pushpa ma'am, over to you.
Thank you. Good afternoon, everyone. On behalf of Kilitch Drugs India Limited, I, Pushpa Nayapani, Company Secretary and Investor Relation Team of me, welcome you all to the fourth quarter and financial year 2023 earnings call of Kilitch Drugs India Limited. Today, the team will discuss financial performance for the quarter, business overview, and answer to the questions you may have. For ease of discussion, we will look at standalone financials. The call recording and call transcript will also be posted on the website of the company shortly. To ask not more than 2 questions in the initial round, and if you have more questions, you are requested to rejoin the queue. If any questions remain unanswered during this call, only requested to write them out. We will reply at the earliest. Now, I hand over the call to Mr. Mukund Mehta, sir, Managing Director of the company. So, over to you.
Thank you, Pushpa. Ladies and gentlemen, a very warm good to each and every one of you. It gives a great pleasure to welcome you to the first earnings conference call of Kilitch Drugs India Limited in this year. Before we delve into the financial, let us have an overview of the operations of the company. The company, as you know, the company is engaged in operation ranging from manufacturing to marketing a host of formulations in all dosage forms. I mean solid, liquid and parenteral, with more than 3 decades of successful pharmaceutical solutions with a strong presence in Africa and Asia Pacific. We have established ourselves as a key player in 26 African countries, offering a portfolio of 350 products. Our manufacturing plant in Mumbai is equipped with a dedicated dry powder section, ophthalmics, as well as the capacity to produce small volume liquid parenteral ampoules and vials. Our manufacturing plants are certified by WHO GMP, ISO 9001 and ISO 13845 and host of other countries of Africa and Asia. After commencement of cyclosporine facility in Ethiopia and a positive growth, the company proposes to set up a new greenfield pharmaceuticals project at Khopoli, Maharashtra, India. The project aims for development and manufacturing of various pharmaceutical product dosage forms, the requirement of World Health Organization, EU standard guidelines, US FDA GMP and other regulatory requirements. By expanding our own manufacturing capabilities, we aim to ensure the production of high quality products, establish a robust supply chain and reduce our dependence on outsourcing. This move will enable us to make a greater impact in both domestic and international markets. With favorable outlook for pharmaceutical industry, the company is well positioned to benefit from upcoming trends. Presently, we have registered over 600 products across the world with an additional 450 plus products currently under registration process. Our product range encompasses gastroenterology, anti-inflammatory, anti-malarial, diagnostic aids, uterine formulation, and veterinary medicine in the form of ampoule and vials. We have a diverse, robust product portfolio that covers a wide range of therapeutic areas and product forms. Offerings include parenteral and nasal product, oral formulation, effervescent tablet, nutritional product, medical devices, cosmetic and herbal product. Furthermore, we have developed a comprehensive line of oral formulation, including tablets, capsules, dry syrup, and oral powders. These formulations are highly effective in areas such as antibiotics, anti-diabetic, cardiovascular health, and more. Our extensive research efforts have led to the development of a wide range of effervescent tablets and powders. These products offer an advantage of delivering a large dosage of ingredients in a single serving, enhancing convenience and efficacy. To name a few, our Indian manufacturers whom we are working with is Intas, Mankind, Indeco, and many more others, a reputed name in pharmaceuticals. Now let's shift our focus to the financial progress made during FY23, Q4 FY23 and FY23. We have reached the highest ever quarterly growth in Q4 FY23 as compared to Q4 FY22. Q4 highlights for standalone as detailed below. Operating revenue amounted to 43.28 crores, representing a growth of 35.12%. EBITDA stood at 8.12 crores with an impressive growth of 71.31%. EBITDA margin improved to 18.76 from 14.8%. PAT reached 5.13 crores, demonstrating a remarkable growth of 69.87%. EPS rose to 3.29 from rupees 1.4. For the whole year of 23, the financial reads as under. Operations revenues at 117.78 crore, reflecting an increase of 12%. EBITDA reached 21.70 crore, exhibiting a significant growth of 39.91%. EBITDA margin improved to 18.8% from 14.80%. PAT amounted to 15.72 crore, showing a growth of 49.29%. EPS rose to 10.09 crores from 6.76. Thank you all to all our stakeholders who are in this journey towards growth. With this, I would like to leave the floor open for question and answer session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 on your touchtone telephone now. We take a first question from the line of Keval Ashar from DSP Mutual Fund. Please go ahead.
Good morning and congratulations, sir, for good numbers in FY23. A few questions from my side. First is that, sir, what is the reason of us setting up a manufacturing unit in Ethiopia out of all the African countries? So what were the advantages that we get in terms of tax benefit or government support, etc.?
Shall I reply?
Yes, sir. Please go ahead.
See, particularly myself, started a career from Africa only. That was not the reason only. But this government, Ethiopian government, is very stable government, except this last one and a half year, where the internal fighting was there. Otherwise, they were robust economy plus a good governance. And we Indians are very much respected because so many, around 30,000 Indian teachers are working there at present also. So my idea was that we should have a foot in the market where we are operating. And that was the reason, and plus we got a very good distributor who also invested along with us. So we got a joint venture, as you know, 67-33%. And moreover, cephalosporin, the plant which we have put there, their own requirement is 25 million vials per year. And we have put a capacity of around 16-17 million vials. But due to some exchange shortage and other things, it is not working at a full speed. But as this particular government of Ethiopia has decided, they will allot a lot of foreign exchange for importing the material. So we are hoping that this particular year, 23-24, will be the robust year for Ethiopia factory. Okay. Yeah.
Thank you.
Hope I answered your question.
Yes, sir. Yes, sir. Definitely. So, sir, I was coming to the same thing. So, if we see in our Ethiopia business, we are hardly doing any revenues in FY23 at least, and we are also posting losses. So, what is the reason behind this? Reason behind that? Since you mentioned the demand is $25 million or 25 million vials per annum, but we are not doing any revenues and posting losses. So, what is the reason behind that?
First, there was a internal fighting going on for 1.5 years, which has settled just 2 months before. Internal fighting. So, everything was disturbed. Even people were worried what will happen to our people there and something like that. But everything settled down. And from 1.5 months, everything is working now. So, this particular demand is there, always there. And they have floated the tender for the same also before, just for a 15-20 days. But we have stopped government for announcing the tender because we need a foreign exchange for that. We have to send all the material from here, no? So we need a foreign exchange. That government has agreed in principle to give the foreign exchange to us. So now I hope this particular year will be the robust and the next year will be the much robust for Ethiopia. Okay. Yeah.
Okay, sir. Got it. So, sir, so now in Ethiopia, so do we plan to also export from the Ethiopian plant? And if yes, then which countries do we plan to export from Ethiopia?
Yes. We are planning to export. First of all, in our line, inspection happens. So just before 15-20 days, WHO Geneva has been triggered for inspection because they buy a lot of medicine for Africa. And cephalosporin is one of that. We have triggered a mock audit for that and we have successfully completed. Well, we have submitted the files in the nearby countries, that is Sudan, Uganda, Kenya, Tanzania. These 4-5 countries and Nigeria. So these 4-5 countries we have triggered an inspection because in our line first they inspect the plant and then they register the product. So it will happen. It will happen at its own speed. we cannot do anything because it's a queue and the other things are there. But in a short while, means in a year or two, it will get registered in the 7-8 countries which we are looking. Okay. Thank you.
Okay, sir. Got it. Sir, now coming to the Indian plant. So, what is the revenue potential from India business, from the Indian factory? How much revenues can we do?
I didn't hear you much.
How much revenues can we do from the Indian plant?
See, we are doing very good. I don't want to commit any figures for the sale. And it has been a very nice year last year also. So this year also we would like to do, we will be doing much more better and better because because of our effervescent division is working very good, plus all other things are going at par. So the growth will come on its own.
Okay, sir, got it. So, sir, if I see from our Indian plant, we export to many European countries like France as well. So, how are the contracts with those in those countries? So, is it long-term contracts?
What is happening is that Francophone countries, what I mean Francophone, that Ivory Coast, Benin, Ghana, and the coastline, West coastline countries, where French is dominated. And they were ruling for this 200 years like we rule. We were ruled by British, So, still there is a system that goods has to go to France and France will supply to them. It is, Peugeot गाड़ी वहाँ मिलेगी आपको जो दुनिया में कहीं भी नहीं मिलेगी. So, it is much more dominated by French people. So, we have to send the goods to France and France will sell. So our money is secured and everything is secured because we are dealing with France. Of course, we are marketing in Benin or Ivory Coast or Ghana and other countries. Okay?
Okay, sir. Got it. Sir, so now coming to the margin profile. So what is the margin profile generally we can expect in African business and in Indian business?
We have proved it now. Already there, in this Q4.
Yes.
The same pattern will go.
We've got from Indian business, but African business is still posting losses. But under the normalized cases, how much margins can we expect in Ethiopia business?
African business, come again, you are saying are in losses?
So Ethiopia,
so preliminary expenses were there, no? And factories remain closed for 9 months. Vagere. So losses has to happen, but everything is covered now. Don't worry, we will show a robust growth for Ethiopia this year.
Yes, sir. So on the normalized basis, since now our plant has started, we've started getting forex reserves as well. So how much margins can we do in Ethiopia now on normalized basis?
There is no question of margin, as we are the only manufacturer, and government is supporting in all the ways. So no question of margin arises. आपके पास माल है, आप कुछ भी भाव में बेचो, कोई भी नहीं बोल रहा है.
Okay. So can I assume that it would be higher than the Indian business?
Of course.
Okay, sir. Got it. Sir,
now my son will answer your question.
Yeah, please.
बोलो ना, बोल.
No, sir. Please. I'll ask later.
Okay.
Thank you. We take a next question from the line of Yashwant D from Cogent Finvest. Please go ahead.
Can you please share your insight on the injectable business? What is the market size and what is our presence in it?
Yeah, ma'am. Can you come again?
Yeah, I just wanted to understand. Please share your insight on your injectable business.
I didn't get your question, ma'am.
Injectable business. I want your insight on the injectable business.
Insight on the injectable business?
Yeah.
Okay. So for injectable business, we are doing contract manufacturing in India and we are doing exports in the African market, So what insight is required from your end?
Like what is the capacity and how is the margin and for whom we are doing the contract manufacturing?
Okay.
And what is
So
the market
margins,
size of the
ma'am, I think
injectable business?
reflected on the results that we have given. For the contract manufacturing, we are working with most of the Indian pharma companies like Intas, Indoco, you name them, and most of the injections are made at our facility. And looking forward, we feel that next 1.5 year or maximum 2 years, we'll be in requiring additional capacity. So because of which the Khopoli project has been conceptualized, by which we can produce from there itself and serve the market as for the domestic as well as for the export market.
Okay, sir. And what is the capacity of the Khopoli plant?
Right now I don't have it at front, but I'll come back to you on this.
Okay. Sir, and any incentive we are getting it from the government for having a plant in Khopoli?
Ma'am, it's at present that Khopoli zone has been denotified from D zone. So at present there is no government incentive from there itself.
Okay. And what was the capex incurred for this Khopoli plant?
More than 100 crores.
More than 100 crores. Sir, it is started operating?
What you are saying?
Has it started operating?
No, we have got a land, NA has been done, boundary has been set, planning has been done. Now we are waiting. I mean, after the rainy season, we will just push it on that particular project.
So probably from the second quarter we can see some happening over here, right?
No. Factory will take 2 years, madam.
Okay.
Down the line 2 years. I mean, 25 March onwards it will start producing.
Okay. So what is our current injectable size? What is our capacity in injectable? And what will be after the Khopoli plant come into the existence?
Yeah, so consolidated both because we have many dosage forms, ma'am. So we have ampules, vials, dry powder injectables. So we'll consolidate everything and we'll come back to you on this.
Okay. Okay. That's it from my side right now. I'll come back in a few.
Thank you so much. Thank you, ma'am.
Thank you. We take a next question from the line of Kashish from Sushil Finance. Please go ahead.
Hello.
Yeah, hi.
Please go ahead.
Good afternoon.
Good afternoon, sir. Firstly, congratulations for the good set of numbers.
Thank you so much.
I have a couple of questions regarding export market first and then the domestic one. So firstly, just wanted to understand the currency issue in Ethiopia is settled or it's still there slightly?
See, as far as what we understand, government is going to open up the economy because the food inflation and everything is an issue over there. So if you are aware that Ethiopia being a closed economy, there are no foreign banks and being allowed to be set up. But last year they have allowed 2 Kenyan banks to start operating, and with this there is a sea of change happening over there. And with this we understand that in this financial year, because their year ends in June, so we are expecting some announcement to be made in July, August, whereby there will be some opening up of the economy whereby this forex issue will be resolved. As you are aware that in India the forex is not an issue because we are an open economy.
Correct.
So the same we are expecting to happen this year, so that the underutilization of the capacity can be taken care of and we can work at the maximum capacity, whereas the sales can be taken care of.
Right. Okay. Understood. Secondly, what is our production target for Ethiopian plant for this year and next year?
See, production target. See, all depends on the forex that we get from the government. So we are working with them because we have put a proposal through the local association over there, whereby we have said that the tenders which are being won for the government, the amount which is being given in BIR, instead of that being given in BIR, that be given in US dollars, so that we can import with that and we can ensure that the local supplies which at present the government is importing from China or India, wherever, is being taken care of, and the government has well understood the issues because they also understand that in order to promote pharmaceutical industry and the COVID has opened up the eyes of all the African nations, saying that they want to become the self-sufficient countries. So they also recognize this, since there are companies operating in Ethiopia. They wish to support this, and hopefully in this year the proposal in very few months, I think, so we'll go ahead and we'll be able to get a good sales out of it.
So we should expect some ramp up of capacity this year.
Very much. Yeah, very much.
Okay. All right. Secondly, what is our breakup of sales? So, for example, for Q4, what was our market direct sales and tender business for the Ethiopian market?
So, you're talking about Ethiopia business, right?
Currently, yes, Ethiopia only.
Yeah. So, whatever sales you see in the Ethiopian business is the private business. So, as I told you, the government, if we are supplying to the government, then they will give you the local currency, and by which the local currency, if we take the local currency, then there are issues, challenges in order to get the US dollars, So, plus the prices at which the demand is there is not suitable to operate unless and until they provide the forex. So this is the proposal that is being given to government, and they have accepted that yes, we will look into it and move forward. So whatever sales that you see is for the private market.
Private market, right? Okay. And what was the realization this year per vial average?
I'll have to check. I'll come back to you on this.
No problem. Yeah. So last question on the export market. What is our vision for next couple of years? Where do we see the export Ethiopian market going?
Right. So what we are doing is, since we are in Ethiopia, and now most of the countries are looking there that they have self-sufficiency, and moreover, if you have heard and if you have read, most of the UN agencies or any of the foundations, they wish to procure from Africa for Africa, So that is why we are triggering a host of inspections at the factory, so that we are approved by, first of all is WHO Geneva, either EU approval, by which the whole gamut of UN agencies is opened up for us. See, at present they are buying a lot of antibiotics for the African market, but those are being procured either from India, China, or whatever is the approved agencies. So this concept of their buying from outside Africa we wish to change, since we are one of the biggest capacities in terms of setup in Ethiopia, and we are in Africa. So the concept is well bought by all the UN agencies, and we are following the pathway by which we produce in Africa and where we sell in Africa. So we started this process. Hopefully, a year or two, this will fructify.
All right. Okay. So there's one more P&L entry of 5.4 crores, which is export commission. So what was that?
Sunil will answer. Our CFO will answer.
Yes, sir.
Hello.
Yes, sir.
Yeah, your question about is product registration and commission, correct?
Yeah, export commission and registration, 5.4 crores.
Yeah, so basically it include our country managers' commissions and traveling expenses and their commission only.
So we should expect this going ahead. It's to increase.
Basically, their commission is depending upon the sale part. So if sale is increasing, then commission also increase.
So I mean, what is certain percentage of sales? So what is the average percentage?
It's depending. It's basically 8 to 15%, between 8 to 15%, and depending upon the market.
Okay. All right. Okay, sir. Fine. So my next couple of questions would be on the domestic market. So on a domestic front, what is the scope of growth going ahead?
Domestic front, we are doing contract manufacturing for the site. I already answered to the lady who had. So we are doing many products for these companies, and looking forward, we hope that government is going to increase the GDP spent on the healthcare. So we hope that once that happens, as such, the pharma market is doing a double-digit growth. So the same will percolate down the line, and we also might be able to see the same looking forward.
So we should expect double-digit growth going ahead for year-on-year basis.
Exactly. As far as the GDP spent by the government is maintained or increased, because if you see the GDP spend done by the Indian government to any other government is very less compared to any developed countries,
Right. And any scope of improvement on the margin front from the EBITDA front?
We are striving on that, and hopefully coming quarters we plan to do our best. So let's keep our fingers crossed.
Right, sir. So one question on the capex front. Just wanted to confirm that the revenues will start showing from March 25 onwards, right?
Right.
Okay. And any offtake agreement that we have already signed for the additional capacity?
No. So what happens is the customers whom we are dealing currently, we foresee that there will be a demand supply gap. Means what they be as usually the trend is between 8 to 12% growth year on year. That is the usual. Right now, pharma market trend is there. Based on that trend, we expect that the products that they are off-taking, we might fall short of capacity. So based on that, we are doing it. And moreover, if you know our profile, we've been contract manufacturing from more than 35 years.
Yes.
So we know who's and who in the industry. So getting work for the unit will not be a daunting task for us.
All right, sir. So last question on the non-core asset front. Any plans to monetize anytime soon?
On which assets?
Non-core assets. We have a land in Bhiwandi, I think. So are we planning to?
At the right moment, we will do it.
Okay, sir.
At present, we are focused more on pharma. So we'll be, I think so, because as you rightly said that the numbers matter. So we are also working on these numbers so that we are more focused towards the pharma market.
All right, sir. That's it from my side, and all the best, sir.
Thank you. Thank you so much.
Thank you.
Thank you. A reminder to participants, if you wish to ask a question, please press *1 on your touchtone phone now. We take our next question from the line of Chinmay from Moneybee Investment Advisors. Please go ahead.
Hello, sir. Thank you for the opportunity. So,
Yes, good afternoon.
Again, I think the past participants have.
Ma'am, I'm sorry to interrupt. Your audio is not very clear. Please use the handset and speak a little close to your mic, ma'am. Please repeat your question. Thank you.
Am I audible now?
Yes, this is better.
Yes. So, sir, I think the past participant has already addressed a few of my questions. With regards to the land parcel you have, I think in Bhiwandi, do you have any plans to monetize this going forward?
So I think so we've already clarified that at right opportunity we'll plan to do that. So at present, ma'am, we are fully focused on the capex that we wish to do and ensuring that we have a sustained growth looking forward. So that is what the plan is at present.
Okay. And so with the new capacity that you have coming up in Khopoli, is there can you give us a number on the size of the capacity that will be coming up?
We'll do that. I think so one more lady has asked for that. So we'll consolidate the figures and give it to you what is the current and the additional capacities that we'll be having.
Okay. And with regards to the factory in Ethiopia, so is it currently, I mean, on how many shifts is it running currently?
One shift, ma'am.
But do you plan to take it forward to multiple shifts, say 2 or 3?
The gentleman just asked that how do you plan to do so. I answered that when the government contract kicks in, means what we are discussing with the government in order for them to buy locally rather than importing, we'll have to run minimum 2 shifts. That is what the plan is, And in order to sustain the private market, because right now whatever sales you are seeing is from the private market, we might have to go for the third shift. So that is what the plan is.
Okay, that takes care of all my questions. Thank you so much for your time.
Pleasure, ma'am. Thank you so much.
Okay.
Thank you. We'll take a next question from the line of Sanjeev Kumar from SKD Consultancy. Please go ahead.
Namaskar ji, I am Sanjeev Damani, and I really pay my respect and appreciation for the management for bringing up this company to this stage. So if I am audible, I begin my question.
Yeah, thank you. Come on.
Please go ahead.
Yeah, sir. Please go ahead.
Sir, one question which emerged from the discussion itself is if you can kindly indicate the value of land that company possesses and which can be disposed of, approximate value, not necessarily precise value.
Fine. We'll come back to you on this.
Okay. Now coming to one more fact that, the registration fees and commission have risen to more than double, but the sales have not risen in that proportion. So it is merely commission that have risen or some registration renewal pieces for product registration in various countries that this expense reflects. Can get a confirmation from you, sir?
Right. I'll ask my CFO to just answer your query.
Yes, sir. If you see the our result part, our sale also increased by 30 to 35% compared to last year. So if you see the
on annualized basis, sir,
annualized basis.
It is more than double, sir. The amount is 548 for previous year. This year it is 11.42 crores.
Correct.
The site export product registration, then I would presume that you really need to renew certain registrations in various countries for various products, or you might be going for more registration elsewhere or in the same country for more products. So kindly confirm.
Yes, sir. Basically, this expenses include two parts: registration and commission. So I think registration and commission, if you see the figure, then commission part is more than the registration charges. So if this figure is showing almost 4 crore higher to last year. So reason for this, basically we have the country manager in the all the countries, respective countries, and their fixed expenses, commissions, traveling expenses also increase in this year. So overall, if you see the expenses is increased compared to last year.
Okay, sir. So, sir, one more question I want a confirmation is regarding, are we only manufacturing formulations and ready-to-use drugs, or do we also make certain APIs necessary to make these drugs?
We do only formulations.
We do only formulations. Okay. Now that what is the estimated capital expenditure for the new Khopoli project that we are planning, sir?
More than 100 crores.
More than 100 crores. Okay. Thank you very much and all the best to you, sir. And if I need, I can contact in the office regarding those questions.
Yeah, you can contact Pushpa.
Okay, thank you.
Thank you so much. Thank you so much.
Thank you. We take a next question from the line of Keval Ashar from DSP Mutual Fund. Please go ahead.
Thanks for taking away my question. So, sir, two questions. First is, do we get any tax benefit in the Ethiopia manufacturing unit?
Yeah, very much. There is 4 years income tax benefit.
And sir, when does it start from? So was it when we established the plant or when it commenced? So when is this duty till?
Yeah, it started from July 21.
Okay, so it's there till July 25.
Yeah.
Got it, sir. And the last question from my side is, sir, that what are the average realizations for cephalosporin, like in the tender-based contract?
Average?
Realization.
Okay, so we had not supplied in the tender. You are asking specifically for Ethiopia, right?
Yeah, sir, Ethiopia.
Yeah, so we had not supplied in government because we were of the opinion that government has to provide us the forex, So now the government has understood our issues and they are ready to they have agreed that they will provide the forex. So I think so this year, I think so I'll be able to come back to you that what is the realization then, because whatever sales you are seeing is from the private market.
Sure, sir. In the private market, what would be the realization for cephalosporin in Ethiopia?
In terms of?
So average realization for cephalosporin, which we sell in private market.
Yeah, but it is in terms of bear, so it's around 30 to 35 bear.
Okay, 30 to 35 bears. Okay. Got it, sir. Thanks and all the best for coming years.
Pleasure. Thank you.
Thank you. To ask question, participants may press star 1. We take a next question from the line of Girish Chandbag, investor. Please go ahead.
Hello. Good afternoon.
Good afternoon.
Yeah. This is regarding your Khopoli plant expansion. How are you planning to fund that expansion?
So we are talking almost we have got the sanctions from the bank to fund the project.
Okay. Okay. So mostly it will be external loan. You are not planning to. Okay. Okay. That's all. That's all from my side. Thank you and all the best.
Thank you. Thank you.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session. I now hand the conference over to Mr. Gopal Chandak from Kirin Advisors for closing comments. Over to you, sir.
Thanks everyone for joining the conference call of Kilitch Drugs India Limited. If you have any query, you can write us at research@kirinadvisors.com. And once more, thank you everyone for joining the conference call.
Thank you so much.
Thank you. Thank you everybody for asking question, and we hope that we have answered to your satisfaction. Thank you. Good day. Stay safe.
Thank you very much, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.
Thank you.
Thank you.
Thank you, sir.